Could the Fibonacci analysis tool be the only one we really ever need for silver price analysis over the long term, and how predictive can it be? This is your weekly price update and analysis brought to you by Ainslie Bullion and the Gold and Silver Standard. My name's Joe. We're only going to focus on silver this week. We normally do gold, platinum, and maybe some crypto. Focusing on silver, we're going to do a macro view of the Fibonacci analysis tool, and then we'll zoom in to what's happened in the last week or so in the silver price. This is based on the tradingview.com website. It's priced in US dollars, $21.20 right now. And this is the monthly time frame. So quickly, for people who don't even know what Fibonacci is, quick historic lesson. Fibonacci was an Italian mathematician, the most talented Western mathematician of the Middle Ages, also known as Leonardo Bonacci. Had a few different names, but Fibonacci is mainly known as. And he realized the Fibonacci sequence, hence named after him after he figured out the sequence. So here's the sequence of numbers, or the beginning sequence of numbers. Check it out, 0, 1, 1, 2, 3, 5, 8, 13, 21, 34. And what you notice when you start getting to here, well, you can actually notice it the whole way through, but it's more prevalent when you come to the 3 and the 2. So 3 plus 2 equals 5. 5 plus 3 equals 8. So when you take the number that's at the front and then you add the previous number to it, you get the next number in the Fibonacci sequence. 8 plus 5 is 13. 13 plus 8 is 21. 21 plus 13 is 34, and so on, and so you go until, almost infinity. So that is the Fibonacci sequence. And the Fibonacci sequence in trading is a little bit different. There's a couple of more calculations. You've got to multiply by a certain number and a ratio, etc. But, and I won't go into those details, but Fibonacci retracements, or the Fibonacci retracement tool, it's a popular form of technical analysis used by traders in order to predict future potential prices in financial markets. If used correctly, that's another caveat right there, Fibonacci retracements and ratios can help traders to identify upcoming support and resistance levels based on past price action. So my feeling about Fibonacci and really any analysis tool, this is all based on psychology anyway, but it can be quite predictive. So you could, is it cart before the horse, or is it chicken or the egg? Is Fibonacci really predictive just because it is, or is it predictive because so many people believe it to be predictive, and then they place their trades accordingly, and then it becomes a self-fulfilling prophecy? Whether it's chicken or the egg doesn't matter. What we're really trying to find out is it just predictive in the first place, regardless of the reason why. So let's take a look at silver. This is on the very long-term time frame, and you can see, or you've been able to see previous in my analysis videos, I have all the other stuff drawn in, the trend lines, the rectangular boxes, the relative strength index down the bottom. I've gotten rid of all of that stuff, all the lines, etc., just the Fibonacci. Now, I've had this drawn in for a long time, and personally, I use the Fibonacci taken from the high here of 1980, so that's when we hit that $50 mark, call it roughly $50 US, and the low right here, so there's the 10 marked at the top there at $50 in 1980, and the 0 level right here, marked at that early 90s low of $3.50. Now let's take a look. Has that been somewhat predictive, or quite predictive, after popping in? Let's pretend that you pop this in for this high, there's early 90s, mid 90s, and you went, I'm going to draw this in, and assume, for example, that none of this existed. Let's see, has it been predictive in that time? Okay, so let's take a look. So the high of 1980 of $50 and that low. So let's take a look. So you have a few different prices here. Let's go through those quickly. Of course, you have that top there at around about, it's $48.50 roughly. Let's call it $50 just to be even. You have the 0.786 retracement level, and that's currently sitting between this high and this low. That's a level of about $38.39 US dollars, around about $39 US dollars. And the next one here is usually called the golden ratio, the 0.618 Fibonacci retracement level of around about $31 to $32 right there. The 50% is a big one that people tend to find predictive, and that's so the 50 is the halfway retracement point between this high and this low, and that's at $26 right there. $26. Does that remind you of anything I've been talking about for quite some time? So that's the 50% mark. The 0.382 at around about, that's $20.70. Keep that number in the back of your head, $20.70. And right here, the 0.236 retracement level of $14 roughly. Okay, so let's take a look. What happened after we had that bottoming out in the early 90s? Now, this is a big range right here, okay, between the zero level, the bottom level, and the 0.236. But let's take a look. Let's zoom in a little bit more. What you can see here is we had that beautiful run from $3.50 all the way up to a cluster of prices. What you might notice, and it's not exact, but what you might notice is we started clustering around the resistance level of that 0.236 level of around about $14. Now, very interestingly, I'm going to take you back to the past in just a second. What do you notice before this bottom was in? If you take a look right here, after the high of $50, we had that low down here of $4.80 roughly, and then we had this beautiful move up. And what do you know? The resistance level was around about that $14 level, even though the bottom hadn't been put in yet. Okay, so just bear that in mind. That's interesting. I find that very interesting. The resistance level here around about that 0.236 level. But right here, you can see very clear resistance around that level. Now, again, it's never going to be 100% perfectly accurate. You might spike above, you might have a spike below, but it sort of closes around that general area. So you had that move here to around about that 14-15 level. It's definitely, I would say, within, the ballpark for sure. Back down here, and then in for a good, again, this is on the monthly time frame, for a good number of months in 2006, you saw the $14 level, the 0.236 Fibonacci level, as an area of resistance. And then it was a failed breakdown, and then a move, a confirmed breakout above, coming back to test that area. And what do you know? Here we are in March of 2008. We found a resistance level of around about the $20.70 level, which is the 0.382 Fibonacci level. Now, here is the first little blip in the market, and this is where we spiked all the way back down to that $8.50 level roughly. Now, what caused that? Well, 2008. Okay, so this was a black swan event. So, of course, in financial markets, you can do all the predictive tools that you want, but black swan events may occur, and when they do, they usually overcorrect, or they usually go way out of the predictive tools. Okay, so for example, in 2008, you had the global financial crisis, and then you saw everything go down, but including the metals. So we spiked all the way down. Now, I think I can confidently say, and of course, hindsight is 2020, and you never know what could happen, but I feel like if the global financial crisis did not occur, I don't think you would have seen this spike all the way down to $8.50. You may have certainly seen a retracement, but I think you would have seen more support at the 0.236 level of $14. Again, hindsight, 2020, all that sort of stuff, just making a wild speculation. But I think it's a decent speculation. If the black swan did not occur, probably would have likely have found support at around this cluster of the 0.236 at $14 before continuing on its merry way. So you can't discount it completely, but just take that into account. That was a black swan event that took the price down to there. So then you have a little cluster again around the 0.236, $14, and then on our merry way back up. This level here of the $20.70, the 0.382 Fibonacci level, did no longer act as resistance. We shot straight through there. And let's take a look. On the merry way up to $50 in the peak in 2011. Where did we hit any resistance levels? Yes, so we sailed through that 0.382 level. We actually sailed through the 50% level right here. That's at $26. But interestingly, let's see, on a monthly time frame, again, on the monthly time frame, in January of 2011, we found resistance for at least a month at the 0.618 level of around about that $31.20. You can see that little red month spike down, and we had a wick down to almost back down to that $26 level, which is the 50% mark. Okay, so you can see the way it ranges in between, and then we completely shot through this level, which is the 0.786, shot through that $39 level and straight onto the previous all-time high in 1980, which became a double top. Okay, so we certainly saw that. So it came up to the double top right there. Now, what happened since then? Has Fibonacci been predictive since then? It most certainly has, in my humble opinion. You can certainly see it here. What you can see is the very clear support level of that 26. There you go. There's that 26 level that I've been talking about for a very, very long time. 26 has been a support level and a resistance level for quite some time. It was support for about 2 years, roughly. So we came down and we had a spike there, and that was in September of 2011. And then we had another test. It was a wick down in December of 2011. And then we came back up. We failed. We came close to the 7.786 Fibonacci level. It was another support level. So this 50% retracement level, again, from this old high of 1980. Again, understand that 1980 and the old level of the lows of the early 90s, this 50% retracement level was a huge area of support. When you take a look, again, don't look at all of this for a second, just look at this right here. Why would anything suggest that the 50% level would be an area of support? If you get rid of this, if I hide this for a second, if I hide that, take a look at that support level. Does that coincide with any previous resistance? Not really. You've got this little resistance level here at $24, but that's a resistance level right there at a support level of 26. That makes no sense if you don't pop in the Fibonacci. When you pop in the Fibonacci, it's right bang on the money of the 50% retracement level from this old high and this old low. So this is why I find it very, very interesting. It's not going to be completely 100% predictive, but over the long term, so far it's looking so good. So far it's looking good. So again, these three levels, and then we had this spike above. We made a play for it. It was a failed move. And then finally, in April of 2013, that's when the trapdoor opened, and then we headed all the way back down. Now, interestingly, side note very quickly, my first day in working in the precious metals industry was the day that, or over that weekend, that we did finally break through 26. And I can tell you, on that Monday, on the first day that I started in the precious metals industry, there were lines out the door because everyone was saying, oh my goodness, we broke through 26. And I think it was around about this sort of 23 level, and oh wow, and people were just out the door looking to purchase. It was a very interesting trial by fire on that day. Anyway, back to the stuff you want to know. So right here, breaking down below, you can see a sort of a rough cluster at that 0.382 level, but not really. What it took until all the way down to December of 2014, where we had a support level, look, right on the money here, and it was a wick down too. This was a green month in December of 2014, but we had a quick wick down to bang on. Look at that, $14. That closed at the low, sorry, $14.15. And what's this? That's $14.13. So a couple of cents off is just amazing in my opinion right here. And then we had a move. It was support yet again, and then support yet again with a little bit of a close below. But again, around that kind of $14 cluster, which is again that 0.236 Fibonacci level, again from the old high of 1980 and the old low of the early 90s. And now we're in 2015, and this is still playing out. Then what happens? We have that beautiful rally all the way back to, hey, gee, what do you know? $20.70. It technically topped out on this index at $21.13, but you can see here it roughly closed around that area of that $20.70 level. And then spent the next, so that's 2016, and then spent the next while ranging through, a little spike back down to the 14, and then November, so a couple of years, it ranged between $14 and $20.70 roughly, or call it 14 and 21 roughly, and then back down support level in October of 2018, and then we made a move higher. We did not break this level of 21 at the 0.382 level. And then we have this unusual spike all the way back down through an unusual spike to around about $11.50 US cents. When was this? Well, this was in March of 2020. What happened in March of 2020? The COVID panic, another black swan event, just like the global financial crisis. So that's why you see this big spike down here. So I'm going to make that same speculation, is that if we did not have the COVID crisis, if all markets didn't go crazy for that month of March in 2020, I don't think you would have seen that spike below to 11.20. That's a big spike. Now, what you'll notice though is that spike on the monthly time frame was eaten up really quickly, and interestingly, where did we close and where did we open the following month at? What do you know? At around about that $14 level, which again, the 0.236 Fibonacci. I know I'm harping on this, but have a look at how very interestingly, very predictive it seems to be. Again, is it a magic thing, or is it because enough people believe it and so psychology takes over and it's a self-fulfilling prophecy? Or some people believe that the markets are just completely manipulated in terms of computer manipulation. Some people believe that it's all computer based. It's all heavily manipulated by computer trading algorithms and things like that. Even if that's the case, could they be using Fibonacci as their guiding tool to make sure that things don't go crazy, to sort of hide within the numbers, if that makes sense? If that makes sense, quite possible. Who knows the answer? But we do know, we can certainly see that it seems to be quite predictive. Okay, and just sort of rounding off what you'll see here after March of 2020, we've had that move to try and break through the $26 level, but it's remained resistance. So we've been hovering in this general area. We did have those couple of spikes above the 26 level, the 50% retracement level, but it was a failed move. Came close to the 61.8 here, around about that $30 mark, but it failed, and each time it broke down. And you can see just here recently, 26 has been a major resistance level, back down below, and then again 26 has been a resistance level, and here we are now. So here we are on, where are we? October the 4th, 2023, $21.20, and let's pop a look in very quickly at where did we spike down to in the last week or so, and you can already see it right here. Again, doesn't mean it's exact and all that. Doesn't mean we can't go lower and all that. But I just find it interesting in the last week, we've had this spike, and I'll pop it onto the daily very quickly. Onto the daily time frame, we had that little fake out just there. We thought, oh, here we go. Silver is on its way, $23.50. And bang, in the last couple of days, in the last few days, a spike down to, what do you know? On the daily time frame, look at that, $20.70 US cents. Let's pop it out to the weekly. It's the weekly low so far for this week, and we're on Wednesday, so only a couple of days into the week so far, but it's a little spike down to the 0.236. Now, on the weekly, very interestingly, just take a quick look. We were on the monthly before, but look how the Fibonacci level of the 0.23, that's not the 0.236, the 0.382, sorry, of that $20.70 level. Look how that was a level of support, breakdown, level of resistance, breakdown, and sort of clusters around that general area. And so far, we're back down to that area and has so far acted as support. Now, I'm certainly not saying that in the next week or so we can't break down, but just bear in mind that on the monthly as well, we have spiked down so far at that level. So potentially, now from here, it's all speculation, okay, of course, because we don't have any data. We're talking about the future now. So potentially, could you see, a cluster around this area? Quite possible. Could we see a move back down to the $14 level? Quite possible. What I would suggest is these areas right here, and this is why we're talking about it, these areas can be major areas of a clustering of prices over the longer term, never mind the daily and the weekly, but over the longer term, they tend to be, you've got these little spikes down where they don't, but over the longer term, I think I've made a very good case, particularly on the monthly time frame, that you find these levels can be quite predictive, again, over the longer term. So for the day trader, the swing trader, probably not for you, but for the longer-term trader who is looking for good areas of support and resistance, I think the Fibonacci tool is incredibly predictive, at least while it's in a specific range. So we're still within this range of the $50 to $3.50 level. Do I think we're going back to $3.50? No chance at all. Quite possibly, could we see $14 again? That's actually possible if we see some kind of quick, black swan event. I think we could come back down to that area. Of course, just keep this in mind because these are cluster prices, and I do think they do act, the Fibonacci acts as some kind of predictive tool. Where we go from here, I don't know, but let's do some blue sky thinking. Let's now do some, oh my goodness, silver is going to the moon. Let's take a look at the next resistance levels based on only the Fibonacci, not all the other stuff that I do. Plus, let's take a look at where they could go after we break the all-time high eventually. If we do that, pretty confident that we will over the longer term. We get into, high double digits and triple digits. So based purely on the Fibonacci, the next major resistance level, it's going to be, we'll have to get over this 26. I've been talking about this $26 level for a very, very, very long time. The support level of 2011 to 2013. Recent resistance has failed to get over it. Been talking about that for a long time. So I've got to get over the 26. Your next resistance level is around about that $32 mark. Your next resistance, which I don't think will be, it might not be huge resistance, because take a look in the past, although the past isn't necessarily a prediction of the future. So I will keep it in there. So do bear in mind, you've got that $38 to $40 level. And actually, if I were to pop on my other indicators, I actually have had, and I can show you, maybe I'll get rid of all these later, but I've had a rectangular box drawn in as the most realistic price target for 2023. I did this in earlier this year, if we were continuing in the bull market right here. Of that $37 to $40 level was my next cluster, and that was based on the Fibonacci level right here, again from the old high of 1980 to the old low of the early 90s. So that's an area to keep in the back of your mind, that $39, $40, $37 to $40 level right there. I think that's the most predictive resistance level after we break out of 26 and 32 right there. Now, of course, you've got the old high of $50. More likely than not, again, this is going back to 1980, a huge range right here. More likely than not that this would be taken out. Again, maybe some resistance on a couple of months time frame, but I think over a number of months you would see that very quickly taken out, and then we would be heading up to uncharted territory. But can it be charted using Fibonacci analysis? So not only does Fibonacci have retracement tools, but it also has analysis tools for going for predictive prices into all-time highs, etc. So it has these predictive levels as well. Now, these are a little bit more, these levels right here are a little bit more custom made. The big one here, and the big one that a lot of people do consider to be a predictive level, is right here of the 1.618 Fibonacci level, the extension of the old high wherever you put it in. Now, I've put it in again, 1980 to 1993, $50 to $3.50, and the 1.618 Fibonacci level from that high and that low is at $76. So I personally, not financial advice, not advice and the opinion necessarily of Ainslie, I think after we break out of $50 eventually and we start making all-time highs, I think we'll start clustering around about, you may see resistance clustering around that $75 to $76 level because it's the 1.618. It's a very popular extension target for Fibonacci users. Now, when you get higher than that, some people have some differing analysis. Some people like to use the 2 right here. I personally like to use the 2.618 and the 4.236. I found those personally to be more predictive, but again, completely wrong. I could be completely wrong, and it depends what, again, the majority of people believe, because then psychology takes over, becomes a self-fulfilling prophecy. I find this, I can tell you now, most people find this in Fibonacci to be a predictive tool, so I think you're going to see that. Of course, when we make all-time highs. The next one for me, though, is at the 2.618, and that's at 120 US dollars. Sailing through, if we were into the next few years, just completely sail through those. The next one I would suggest, and probably, it's going to be, leave that for a while, is at the 4.236 at the $193, technically $194 US. That is, you could comfortably call it, $190 to $200. But I'm going to stick with $76 and $120 as my personal next all-time high or next clustering of prices or resistance levels after we break the all-time high of 50. I think we'll come up to this $75, $76 level, maybe retrace a bit, come back to 50, and then make our way up to 120, spend some time around there. So that's what I think may happen. Now, at some point, this old high, this Fibonacci high of 1980 and the low may change. It depends. So you don't always use, or you won't always use forever and ever and ever, and we're talking, in decades and decades to come, we may not always use this as the high and this as the low for the Fibonacci starting and finishing points. It may change later on down the track. You might start using this high and this low to start predicting the higher prices. But for now, this has been, particularly while we're still in this range, and I think while we start making new all-time highs, I think this is still quite predictive in my humble opinion. So that is the Fibonacci analysis tool. While not exact, I think it has proven itself to be quite predictive and will continue to do so for a good number of years. Now, if you disagree, please post a comment below. Tell me what you think is a better predictive tool. Now, as a bonus for thanking you for sticking around for so long, let's quickly do something which I've noticed this in hindsight a couple of times, and I'm wondering if I can use it next time as a good prediction tool for finding a bottom in the silver price or any price of any particular market, equity, stock, whatever, using Fibonacci. So what I want you to do is follow me with this. Let's erase all of this. Let's pretend we're in 1980 now. Of course, we don't have the internet, we don't have tradingview.com, but you could do the basic calculations, Fibonacci calculations yourself if you're in the 80s with a pen and pencil, if you're really, really smart. So let's pretend we were in the 80s. I just want you to take note of this, and you actually may have noticed it already, but we're going to do it back here. We're going to do it around about here too. Let's see what we find. So let's pretend you're in 1980 or in the early 80s and you saw that move up to $50 in 1980, and then you had this big retracement back down to $5, and then you saw this big spike up here to around about that $14 to $15 mark. And you thought, gee, I like Fibonacci. It's a great analysis tool. I'm going to take the high of, again, you'd be doing this, with pen and paper, but I'm going to take the high of $50, and I'm going to try and find a bottom, even though I don't think the bottom's happened yet. I'm going to find a bottom by trying to line up my Fibonacci analysis tool with recent price action. And gee, this area right here of that $14 to $15 area seems significant. Okay, again, this is all hindsight stuff, so I'm just kind of speculating here. But just take note, it's pretty interesting. So I'm going to take it down to around about that level. And the first level it hits, the first major level it hits is the 0.236. Okay, that's interesting. It's around about that sort of $14 to $15 level. Now, you wouldn't have gotten it exact if you had have done it in 1980. But what do you notice right here? Let's take the low of that $14 level right down here, and it's pretty darn close. So you could have been within, again, where it's different, it's larger percentages, right? But if you had have put the 0.236 Fibonacci level here, right there at that, technically that $14.70 roughly, you would have had a bottoming at around about, or a predicted bottom at approximately $4.40. Now that's not bad if you had have thought, okay, we've hit that $14.40 level, I'm going to gobble up a whole bunch of silver at those prices. Well, look, it spiked down to $3.50. You're not concerned too much. Particularly. Okay, it spiked to $3.50. Okay, so what? But interestingly, let's take it down to the bottom right here of $3.50, and it still coincides roughly with that 0.236 Fibonacci retracement for the old high of 1980 right there, and going through this specific level. So can we do that again? And I did do that again in hindsight. Now, hindsight's 2020, of course, but let's take this and let's take it now to the old high, to the more recent high, I should say, of 2011. Right here. Now let's go. Let's pretend that all of this, none of from here, none of this from there to there, none of it exists. So you're going to go, I've seen this old high of, this new high of $50, and it seems to be that $26 level is a pretty good level of support. It seems significant. So we'll find some levels right here. And even this level right here of that 35. So let's go down and go down and down. You could do it here. Oh, actually, look at that. If you had have done the $26 level right here at the 0.236 Fibonacci, you get a low right here of, oh, look at that. Look at that support level around about $18 to $20. Interesting. But let's go even further. Let's say I think the Fibonacci level, that is going to be the 50% retracement level. So again, this doesn't exist, okay? I'm finding areas of interesting support and resistance. And I would personally, I don't know what I would have done in the past, but look at that. Let me show you this. Let's pretend this doesn't exist for a second. All those prices don't exist. What do you notice? Again, pretend we've just come down to here. Let's pretend we are in, let's see, what's this? This is November of 2012. So you've had that move right here. You've had that move up to 50. You've had the support level of the 50% of $26, and it hadn't coincided with anything. You found it like, that's weird. It hasn't been a major support level or resistance level in the past. But here you're seeing 1, 2, 3, 4 levels of support, and this interesting spike right up here to that $35 level. So again, imagine getting your Fibonacci tool and you're looking for the areas of most confluence, okay? So you can see it kind of lines up there, but that's support, right? So then you go here, you go to the next one. That's, you don't see them matching up with too many lines right there. That's not bad right there again, and you can actually see that kind of predicted it right there. But when you come down to that 50% level right here, look at that. That's pretty bang on the money, right? Down to that 50% retracement level here. You can see a little cluster here. You can definitely see that cluster here. You can see that support. And in particular, what would give it away from me is that resistance level, which was huge resistance at that $35 level. Okay, so you go, that's interesting. It seems to be a confluence of prices at these ones. Now, what would happen if I just leave this bottom here at $11.50? Oh, gee, probably you'll never get there to there again, but, I'll just leave it there. And what happened? We had, let's go right across, and throughout all those years, we had that black swan event of COVID in March of 2020. Where did it spike down to? Look at that, right smack down to $11.50. What that tells me is that there were enough traders who believed that Fibonacci is a good analysis tool. Enough of them actually did that prediction and said, okay, I like that as the halfway point right there. Oh, sorry, not the halfway point, the 0.382, I should say. It wasn't the half 50% level, it was the 0.382 level right there. I like that. That seems like a good area of confluence. That tells me that enough people believed that to be the case in the past, and that a bunch of traders had their bottoming out target at around about that $11.50 level. We had the black swan event, and that was a huge spike, and it got eaten up. Okay, so I just want you to take that into account. Fibonacci retracement tool can potentially be a tool to use for future bottoming prices as well. You've seen it here, I think, and you've definitely seen it here as well. Again, imagine being in this time frame here, using that tool, seeing $11.50, and then watching it all the way through the years. Oh, it never got there. It never got there. $14. It never got there. Okay, right, and bang. Okay, so maybe some people have had, and I think many people do, they have this smaller Fibonacci retracement, and they have, and I think many people do, particularly in the silver market, have this one as their big macro. But when that black swan occurred, what do you know? That spike down to there perfectly coincided with this high and this confluence of the $26 level matching up with those Fibonacci levels. Anyway, that is the power of Fibonacci in my humble opinion. I'll show you one quick thing. Actually, isn't that very interesting right here? The old high right here. Look at the level of the old high, this high in $50 in 2011, and the low of $11.50 in March of 2020, and take a look at the 1.618 extension, not from the old high of this high and this low, but this high and this low is around about 73 to 74 US dollars. That's a confluence of prices in my humble opinion, so that's why I'm pretty confident that that $75, $76 level will be a major level, a major interest, a cluster of prices, a level of resistance after we break through $50 later on down the track. So this is a long way of saying Fibonacci is very predictive. I hope I've proven that. Again, probably a self-fulfilling prophecy. It's psychology-based rather than being a magical thing. But take it however you like it. Use any explanation you like, but it seems to me to be quite predictive. Am I saying 100% they're going to be the prices that will absolutely find resistance at? No, but I think it's more likely than not. So did you find this informative? Did you find it predictive? Post your comments below. Do you completely disagree? Post your comments below. Would love to hear from you. Of course, next week you'll have a full analysis, gold, silver, platinum, maybe a crypto as well. But of course, head over to the YouTube channel, youtube.com/Ainslie Bullion, for the weekly insights videos, our weekly specials. You'll get another one tomorrow as well, and all the other amazing things we do on the channel. Thank you so much for your patience in watching this video. I hope it was informative. Balance your wealth in an unbalanced world. Take care. We'll see you next time.